We're going to look at how we post payments for salaries and wages in Xero. The joy of having Xero and Xero Payroll means that it's all in one product, one place. So when you're processing your payroll, when you finalised it, it posts it to the right accounts within your profit and loss account and your balance sheet. So you're looking at real-time information and the real impact that will have on your business. But if you're making those payments and then you're posting those payments to your employees or HMRC to the wrong account, then that will tar or mar the reports that you're looking at, and it almost increase those salary costs. So I'm going to give you a little run through of what it looks like and how that works and what that impact would be. So this is the demo company. We have the payroll in here set up for a chap called Jack. Jack is not somebody that we know and he's not real, so we don't need to worry about that. And you can see that we're going to look at the weekly one for Jack. So for the week ended the 11th of August, here's Jack. His gross salary was £480. The business had to pay employers' national insurance on top of that of £480 and the employer's contributions of £14.43. So the total cost of the business for employing Jack was £552.91. And of all of that, that's the amount, the £437.63 that's due to Jack. Now, if we go to your profit and loss account, you will see that it will have all of that in here. So we're going to have the gross cost to Jack. We're just going to wait for the profit and loss account to run here. Come on, Xero. Come on, Wi-Fi. Clearly needs more coffee today. Here we go. So we've got the salaries. There's the £480.77. That's the gross cost of the business, because the national insurance and the tax that's deducted on Jack's behalf is the cost to Jack, because we're going to pay him the net amount. So the gross cost of the business is £480. You should be able to see the pension cost. There's the £14.43 and the employer's national insurance there. But what it also then does is creates the liability. So if we go into the balance sheet, and we're going to run this again at the end of 26. That's the date that the reports we're looking at, the 31st of March 26 for ease. So make sure your timings are right when you're running those. You'll see that it's been split down into the national insurance payable. So that's the national insurance payable by Jack. So the employee's national insurance and the employer's national insurance, that's due to HMRC. You've got the pensions payable, and similarly, that's the employer's deduction, so the £14, and the employee's deduction, so that's payable to your pensions company. And there's the £437.63 that we need to pay to Jack. So what we need to do is make sure we're getting that to the right place. And if we go into the bank account, you'll see that Jack is there and set up. So we don't want to post this to as an expense to the profit and loss account, because if we do, we're posting it to salaries again. So instead of Jack's cost being the £480 that it was, we're actually making it look like for that period of time, Jack would have earned around the £800, £900 mark. So 1 week has 2 payments against it. So then that inflates your costs, look like your staff costs are higher than they are, and reduces your profit. So you'll be making decisions based on incorrect figures. So we don't want that to happen. What we want to make sure is that the payments are there. So for the HMRC ones and the pension ones and Jack's payment are being offset against the liability in the balance sheet account. So reducing the money that the business owes. So here we are, 12th of August. We've paid that at the end of the week to Jack. So freeze, and we're going to put Jack's name in. So if we've got to pick back and try and work out what it is, we've done Jack. And we're going to post that to wages payable. Well, there it is, 814 wages payable. So we mark that done. We've got the Y. So we can have week 11th of the 8th payroll. Something in there, you know what it is. You don't have to put anything in the Y, but sometimes it's easier to go back and do that. Now, if we go back into the balance sheet account, what you'll see is that liability has now disappeared. Remembering to change the date to the right period. There we go. It's coming. There we go. So the wages payable has disappeared because we've reset that to nil, because we've paid that to Jack. We do the same thing with HMRC. So we reduce it, we post it to the NIC payable, and the same to your pensions company, Nest, Penfold, People's Pension. The list is endless at what goes there. But what hasn't happened, or what has happened, is that we've left the salary amount in the profit and loss account as that gross amount there, as the amount payable to Jack. And so that hasn't had an impact on the profit after tax because we've paid it to the right account rather than duplicating it here. I hope that helps. It's really important, as I say, to make sure that these things go in the right account.